Most business owners are overpaying on payroll taxes without even realizing it. And what if there was a way to save money, retain top talent, and offer better employee benefits without increasing out of pocket costs? Thank you for being here. Welcome to Professional Insights, brought to you by the National Referral Network. And that question is exactly what we're going to unpack today, this morning in today's interview. I am joined by William Peetoom, a nationally respected healthcare advocate, public policy leader, and strategic business consultant. William is the Commissioner of Senior Affairs for City of San Diego and the CEO of Kaizen Group International. He's also a go-to advisor for employers looking to boost employee wellness and reduce costs through the IRS-approved Section 125 Cafeteria Plan, which I learned has been around for close to 50 years, but we're going to get into that as well. So if you are a business owner, advisor, HR professional, and you're looking to stretch your benefits, stay compliant, and bring more value to your employees, this is the place. So with all that said, let's dive into this. William, morning, my man.
Good morning. Thank you for having me, Mike. It's a pleasure to speak to you directly and to the network of professionals that I understand that value strategy, efficiency, and trust.
Yeah.
And today, talking about the Section 125, we're not just talking about a tax tool, it's a strategy. It's compensation, retention, and revenue efficiency for your clients. And I'm glad to be on. So thank you so much.
Yeah, love having you, buddy. It's been a long time since not only you and I spoke, but just since you've been on here. So, William, let's just start with the basics. I know this plan has been around for a long, long time. We just spoke about that before we got on camera here. What is a cafeteria plan in simple terms, and how does it work for both employers and employees?
So this program was developed in 1978, and it was developed to give businesses an upper hand by pre-taxing the benefits that you offer your employees to decrease their FICA tax, which has a direct result in lowering their workers' compensation, enhance their healthcare benefits on top of their major medical, while also improving or increasing their take-home pay without increasing their salary. So the government put this in place since 1978. It hasn't been too popular since then, but you think of it as a cafeteria. That's why I call it Cafeteria Plan. In some businesses, they offer one lunch. They give you a bologna lunch and they give you some milk, and that's it. And it's a one size fits all. With the Section 125, it's more a la carte. Employees will opt to take what benefits they want and need, and it's then taxed before their pay. So they're decreasing all these liabilities while enhancing and increasing retention, as well as morale within the company.
So does this go on top of a healthcare plan or a replacement too? How does that fit into the
Correct.
overall benefits package?
So they're totally separate entities. And what I like to tell my clients is that if you're going to initiate during open enrollment a new carrier, this is the perfect time to initiate because you're talking about benefits. And so you can do a premium only program, a pop account. So while they're choosing their major medical options, they're also choosing their benefits on the side, which could be like daycare, travel expense. I know some companies now are focusing on mental health. And so engaging with the employees' healthcare on their phone, which seems to be the trend, which we were talking about, everything's on the phone. We want to be able to let them deal with their health issues on their phone. So it makes it much more accessible, especially in an era where mental health is the numbers are really high, and we really need to implement some types of tools. Now employees, if they're having a bad day, they can check in with their app and work it out, right? They
So
don't have.
so in this situation, William, right, there's something going on. Obviously, there's a lot going on in Southern California. They just need somebody to talk to. So they're not going and calling their insurance carrier. They're actually participating in this plan to get the assistance that they need. Is that correct?
Correct. So don't be confused. The major medical is totally separate.
Okay, perfect.
Okay. And then the benefits are totally separate. And some companies are bundling their healthcare benefits for their employees with their premium only program or Section 125 Cafeteria Plan. And they're just saying, hey, subscribe to this. It's an opt-in choice. And once you opt in, now you're going to get all these benefits and more at your fingertips. So there's weight loss programs, there's depression programs, there's, AI has now taken over the healthcare industry. So
Right.
employees will get a survey to customize the responses that they need individually, which is the great thing, because now it's not a one size fits all. It's now very customized to their health issues that they need to address. So while they're addressing that, they feel uh, they feel loved by their employer. The employer is now investing in their retention, and the morale goes up. And now you're going to also see less absenteeism, right? And you're
Mhm.
going to get healthier employees because they're now learning how to take care of themselves. So when they show up to work, they're on their A game. They're not depressed. They're not worrying about something, that's uncontrollable, because these apps are now helping supplement that without having to go to a doctor. Telehealth is a big thing right
Telehealth,
now.
huge.
I've been hearing stories of copays of like $60, just like a cover charge, right? Just
Right,
walking through the door, you don't even get a drink.
right, right.
And if it's just for the doctor to write a script because you have some type of symptoms, you could do that over the phone. I'm, as you mentioned, I'm in elder care, senior care, and we're having seniors that are not as mobile as they'd like to be, using telehealth to take a picture of their wound, going on live in real time with their doctor, and getting the script instantly, and then it's delivered to their home.
Right, right. So, William, I want to be clear, because I know that you mentioned this, but I want to be clear. So, health insurance is different than this, but when you start getting into, at least on the health side, and I don't know if there's a correlation here, as on terms of business size, a company less than 100 versus over 100, the plans are different. So, how does a company size, employee headcount, how does that
So,
affect the type of cafeteria plans?
right. So the W-2 is the plumbing for the piping of this program to work. So you got to have W-2 employees because
Okay.
we're working off the pre-tax dollars. And so a feasible company would be around 20 full-time W-2 employees. And that's a really good time to initiate a premium only plan because it's plug and play. As the company grows to about 100, then you can get into the flexible spending. Then you can get into all these other complex programs that, as a smaller company, you don't have the bandwidth to work with. By
Gotcha.
plugging into a Section 125 that's already set up and has the compliance built into it, because you want to be able to review it every year. And that's where a lot of companies get in trouble, is because they don't review their Section 125 master plan, and they've grown. They've franchised out. They have new locations. They've increased their numbers from 50 to 150, but their plan is still the same. So the
Mm.
plan needs to grow as the company grows. Otherwise, the IRS will come in and say, "Hey, you're not playing by the rules. We want to make sure that there's no discrimination. We want to make sure it's accessible to all." And so there are checks and balances. And when the IRS comes in, they're just going to check your paperwork to make sure that you're in compliance. And that's where a TPA comes in. Take that liability, hand it off to a third party, remove yourself from that risk. You're going to
Yep.
pay a little more, but I would pay a little more to know that the compliance is complete rather than having to go through that learning curve. And I also work with a lot of home health hospice agencies that are small, that are startups, and they're grinding. They're trying to make that company work. But when they're spending, 20, 30 hours on HR, and then the HR rules change every year, they're
Right.
in a constant, learning curve. So offset that to someone who specializes in HR, and have that peace of mind that when auditing comes around, you've got your books in order. So your HR needs to work with your CPA, and a very prominent CPA will be advantageous about implementing these types of programs to help create a tool to help with strategy. So this type of strategy isn't costing, it's a no net cost to either the employer or the employee. It's just a matter of structuring how benefits are going to be billed. Is it going to be before taxed or after tax? And it just makes so much more sense for you to take care of your benefits before taxation, because now all the liabilities decrease, and that's where
Hmm.
the magic comes in. Because as you're pre-taxing, these benefits, the gross pay goes down. So now they're in a different tax bracket. And so with a different tax bracket, now they're not having to have as much holdings to pay taxes. So the tax bracket changes also as well for both the employee and the employer.
And a lot of employees, though, William, don't understand. I mean, and I don't mean to pick on employees, but financial literacy in this company or country is declining over the last 10 years rapidly. A lot of, and this goes to the conversations that we've had on this program as it relates to 401ks and people not investing in 401ks because they think that if I take $50 out of my paycheck pre-tax, then I get $50 removed from my pocket. And that's not how it works, right? If you invest 10, 15, 20, $30 pre-tax into a cafeteria plan, it does not equate dollar for dollar change in your actual paycheck. And this is where there's calculators online to really help somebody make a decision like this, that if 10, 15, 20, whatever the case is, and I'm sure we'll get into this here in a second, but understanding how money flows pre-tax and post-tax is critical when employees are evaluating programs like this, because if you have the information and you choose not to participate, perfect. But do not participate because you think it's X and you don't have the idea of what it is. So all that said, William, when is, not only for the employer, but for like an employee, and I think you mentioned this a minute ago, when is the ideal time for a business to implement a cafeteria plan as an employee benefit?
Sure. Thank you for that question. The best time is open enrollment.
When is that?
So normally in the end of January,
Okay.
everyone's looking for new plans. Sometimes they'll change carriers. Ideal time, because that's the conversation on the table. And then you can just slip in that premium only program because they're already talking benefits. Also, if you change ownership, if there's any kind of structural change within the company, that's the best time, especially the onboarding of an employee. A lot of these programs also don't need to be implemented during open enrollment. It can happen throughout the year. It just takes about 3 months to set up. the company needs to provide a census. The TPA and the broker will then implement a plan, and they get the education, they understand the onboarding process, and in 3 months they're rocking and rolling and starting to save money.
So to walk through that process, Wayne, because when I'm sure there's business owners, one, that don't benchmark their healthcare plans, which they should every year. That's what brokers are for. Go interview other brokers, make sure your plan is optimized. Side note. But as a business owner, I'm sitting here kind of listening to you, and obviously I know a little bit more because I have these interviews, and that's why I love what I do. But as a business owner, I'm looking at, holy cow, I've got the premiums that I pay for the health insurance, and now you're asking me to put this on. And I know you said that there's no net cost, but explain that process. How do you implement this with no cost?
So the organization will make a decision to go forward with a Section 125. At that time, they'll then work together with the TPA to review a census. Then they will take that census and find out what the economic impact would be per employee, because it's going to change. Some have higher salaries, so the monies that flow are going to be different for each individual employee.
Hmm.
Once the economic impact report is conducted, and the owner sees how much could be saved, then they work together with the TPA to set up the HR back office. So it's the money never goes away. It's just rerouted through a pre-tax tool.
Okay.
There's really it's little to no effort on the employer's side, because the brokers are the ones that are doing all the heavy lifting. The only real need from the employer is to promote it and to provide educational blocks of time for the educators to come in and share what this new program is and how they're going to use it. And then for some of the employees, they want to know, how the money will flow. But it's instant. They're not. There is a fee, but it's built into the system, and they don't even see it on their paycheck, because once payroll goes through, it's a tool that just pre-taxes and tax. It takes the benefits and applies them without the tax. So they're going to be able to generate kind of like a rebate analogy.
Okay.
You've already done the work, you've gotten paid, but rather than being taxed and paying more, you're paying less. Like your business owner gave you a gift card to go shopping, and now you don't have to pay taxes on it. So it's more of a rebate structure. So it's as they're saving money, that money pays for the program itself. And
Do
there's
these
even
plans, William, do these plans reduce at all? And this is just because I don't know the answer. Do these plans reduce the burden on the major medical? I mean, could they?
Yes, because they're receiving an increase in take-home pay. They can use that money any way they want. So if they have $300 going to their major medical group plan, and now they're getting a bump in paycheck of $150, they've just saved themselves $150 on their premium every month. So now, essentially, from their wallet, they're not paying out $300. They're only paying $150.
Okay. And then with that one, like and I know you've mentioned a little bit of compliance. You mentioned the TPA. A lot of business owners are somewhat familiar with TPAs, although different, but TPAs are with 401k plans as well. what are some of the key compliance requirements employers must meet to maintain a valid Section 125 plan?
Well, they work together with the TPA to make sure that the offboarding is complete, so that you're once an employee goes away, you're in the HR system and you're removing them from the plan. So, there's, I call it leakage.
Right.
Sometimes some of these employers want to do it themselves, and they drop the ball here and there. So it's really administrative. Just keeping your paperwork in order, making sure that your total number of employees matches the program, and then really reassessing annually what your Section 125 master plan is, because that needs to change as your company changes.
So like anything else, and we encourage business owners all the time on the show to benchmark everything. Your financial advisor, like you and I spoke about this before, interview your CPA every year, make sure there's value there. So what you're saying, even with this, it needs to be looked at every year, not only to make sure that the benefits are still there, but it's structured appropriately given the company size.
Absolutely, because as you grow, you can then start including other flexible spending programs.
Okay.
You can start layering, but you don't want to do that too quick, too soon, because now you're not at that level. And these are growth strategies, and I strongly suggest and recommend this to all my startup companies, because it's a plug and play, and they don't have to go through the task of figuring out what benefits. It's just open the box and play the game.
So you mentioned startups. Are there certain industries or business models where cafeteria plans work better than others, or does it just work effectively across the board?
Sure. So these programs are really good for modest margins, W-2 employees, and companies that want to grow their employee pool,
Mm,
such as home health, right? You got mobile nurses, home care, you got caregivers. Uh, I go after essential workers, also in grocery markets, hospitality, hotels. Those companies that have a large pool of W-2 employees that you want to retain, this is ideal for. What it's not ideal for is the gig worker, right?
gotcha.
Because the engine is the W-2. And if you don't even have yourself set up as a W-2 with your corporation, you're missing out. So you want to implement these programs into those companies that are startups with a large pool of employees, because now you're going to redirect the cash flow back into the company for growth and for technology and innovation. And now you have money from this rebate to do whatever you want with your company without having to go out for another loan.
So how are employee benefits though? When there's a lot of shifts happening, you mentioned gig workers. How are how is the landscape of employee benefits shaping the evolution of, say, cafeteria plans? These have been around a long, long time, but
Sure.
things are shifting. Is that making a shift with these plans, or are these plans going to hold steady and just kind of adapt to the current environment?
I think as the tax liabilities increase, um, smart employers will look for these types of programs to help them save money without having to put in more money. So it's as we said, it's a no net cost, right? It's not, there's no economic impact except favorably to both the employer or the employee. Now, with technology, to your question, I think a lot of these benefits, from what I've been seeing, normally, traditionally, you would have to go to someone's office.
Right.
But with technology and all these new apps, facial recognition, being able to sense your your vitals from your phone, it's a game changer. And
Yeah,
I
there.
think with more and more people being more mobile friendly and understanding that their health is their wealth, and if they don't take care of it, they're going to decline. It just puts the doctor's office on your phone. And
Right.
whether it's medical, whether it's mental, whether it's, there's other different apps. It just depends on what um, your broker chooses to implement in your plan. So a lot of these programs are now coming to fruition because it's accessible with technology's innovation to give it to you right on your phone.
Yeah, I love telehealth. I don't see the doctor very often, but occasionally, something happens and it's 25 bucks and I don't even use my insurance. It's just 25 bucks for the visit.
Sure.
I love it. So, William, I want to be cognizant of your time. So as we wrap up here, like what is it? You gave a lot of nuggets here, a lot of advice, but what is your top advice for business owners who want to offer a plan like this to stay competitive for client or for employee retention and recruiting? What would you say to them? How do they get started?
Speak to your CPA. Find out what they know about the Section 125 first and foremost. And if they don't know anything about it, find someone who does. And there's a lot of companies out there that are now picking up the ball and running with it, because I believe even though it's been an old program, it's been dormant. And now I think as more and more employers are more advantageous about saving dollars to redirect back into the growth, this is a strategy. The money is not uh, going away; it's just being redirected in a smart fashion. So be a smart business owner. Don't let money leak through your hands that you
Right.
can actually be able to catch, and really build a team to collaborate with your CPA and your HR department, because there's a lot of benefits available. And if they don't have the foresight, then you have a problem.
Well, and I want to point out, William, because I appreciate your time here. And I know that you and I've worked, over the last couple of years, actually many years, but you and I've talked about this before. There were marketing companies that would come in and market the R&D tax credit or the employee retention tax credit. And I'm not saying that those companies did not provide a service or valid service. But to your point, find the team that's going to work together, not sell a product. Do not have, and this is anything, your 401k, your estate plan, everything within that business, there needs to be a coordinated effort with these professionals because, to William's point, you do not want to leak money. You want to maximize your cash flow and the benefits that you're providing to your employees. It's a key point. I'm glad William brought that up. If you have any questions, please, William's contact information will be in the description below. Reach out to him directly. And if you have any questions, put them in the comments. I will get them to William. Either we'll answer them, he'll answer them. Either way, we'll get you the information you need to make an educated decision. William, always good to have you on. Appreciate your time.
I appreciate you having me. Thank you so much, and best of luck to all the members of the National Referral Network. Thank you
Awesome,
so
buddy.
much.
Thank you.